U.S. nat gas futures jumped more than 10% on Monday after last week's pullback, with February contracts gaining strength as cold weather returns to large parts of the U.S. Weather forecasts indicate a significant demand spike as Arctic air dominates the Midwest and East Coast. National demand will remain strong through January 12, with temperatures plunging to zeros and 20s across much of the central and eastern U.S. Even the South, including Texas, is set to experience lows in the 10s to 20s. Meanwhile, a winter storm is bringing heavy snow and ice from the plains to the mid-Atlantic, intensifying heating demand. In addition to weather, export demand is providing modest support. Mexico's rising LNG needs continue to drive flows from South Texas, helping to offset some of the oversupply. New Fortress Energy's Fast LNG project remains a steady outlet for excess gas, contributing to market stability. Nevertheless, while today's rally underscores the impact of cold weather, the overall outlook remains bearish. Storage levels that are well above average will likely cap price gains unless prolonged extreme cold persists. Moreover, U.S. energy executives expect faster permitting times for drilling on federal lands under President-elect Donald Trump. Trump's transition team is set to quickly roll out a wide-ranging energy package that includes the approval of export permits for new LNG projects and increased federal land and sea oil drilling. Meanwhile, European natural gas futures dipped to €47 per megawatt-hour, despite cold weather has pushed Europe's gas reserves to their lowest usage point in 7 years, with storage levels just over 70% full compared to 86% a year ago. Prices dropped after EU officials proposed extending the European Union's emergency gas price cap and setting a ceiling of €50 or €60 per megawatt-hour to avert a potential energy price shock. Last Monday, futures gapped higher to $4.20 but faced selling pressure throughout the week, ultimately finding support at $3.35. Traders should prepare for resistance around $3.75 and $4, with additional downside potential if weather forecasts ease in the days ahead. If prices manage to settle above the $3.75 threshold, it will move towards the nearest resistance level at $4. On the downside, main support remains at the $3.40 and $3.20 levels. Expect choppy trade as the market balances weather shifts against surplus inventories. Please like, subscribe, and comment to support the channel. See you in the next one.